Good evening, good afternoon, guys. Uh, Let me hope you're doing well. So, X, uh, just going to first get a look at the DXY, and after, just going to get a look at the DXY. Then we just want to see what is the market showing, what are maybe the possible. Okay, so I think we can kick off. Okay, so I think everyone's in. Okay, so good evening, good afternoon, guys. This is Praise FX, and it is time for CPI live trading. What we're going to do, we're just going to first analyze and we see what are the possible expectation or what maybe we're expecting to see the market doing. Then after, we are going to come back and see all the possible returns. Okay. Now, first of all, we are going to first come on the daily time frame. And what we are trying to do or what you're trying to look at is that you're trying to get the higher time frame perspective and put it in line with the lower time frame perspective. So I'm not going to be so delaying. I'm just going to be as quick as possible as I can so that we can utilize time. Now, if we try to look at things like this, just realize that market, if I'm to put it in line charts, so I always tell people that if the market or if you can't see things well, if you can't see things well when you're on the candlestick chart, that means it is so simple when it will be for you when you try to use it as in line chart. So now if you realize that here the market is bearish and it has been retracing from all all time from here up to here, and as much as possible, as you can see that the market has retraced enough, meaning that price gave a hint into our supply. But remember, this is the monthly time frame, right? And what you're going to do is just going to dive into slowly by slowly until we go to the light time frame that we want to do. Right now, this is what we can understand and this is what we can see in the high time frame perspective. So I always tell people, if things are not matching your high time frame, that means you're messing up somewhere. And trust me, that will be a very big mistake. Just move that. So I think however much I'm using a line chart, you can really understand that where the market is heading. Now, why are we here? We're just going to try to focus on the minor time frame. Now, if I head to the weekly, you realize that price broke this area. Maybe some people call it area of support, but you realize that there was liquidity that needed to be cleared out, and then price came back at this level. All right, price pushed away and then it came back at this level, right? If I try to bring my Fibonacci tool, sorry, just that one. Now if I bring my Fibonacci tool, you realize that price did what we call a break and retest, or most people call it a breaker block. Now why am I doing this? It's just for us to understand and get where to be heading. Now I'm just going to turn into the candlesticks right? Hope now things are more visible. Hope now these things make sense. That you realize that we broke this structure. As we all know, price is supposed to come back and retrace. Now, if we are to look into these things and we see, did really price manage to retrace? Yes, it retraced below the 50%. And another thing, what can we see? We can see that we saw that price came back retested. So if a zone being retested, that means, or that makes it a liquidity for that. By all means or by all chances, if price comes back there, we will have to do what? We will have to clear that thing out of the market and realize that we have this overall liquidity that we might need to take out. Are we together now? We are just going to focus on this most recent price action, the way it is like this, right? Just just need to simplify things and things will be so much simpler. Are we together? Just as simple as that. The way you're seeing that the weekly and the momentum being given here, that buyers are now gaining structure depending on the previous week, the way it closed. That means buyers, by all means, are in the market. So the close of this week will determine whether we still have an imbalance here, right? But whatever things here right now, we can only see that it has created a demand that will only be confirmed when the week closes, right? And any other thing do we have here? We just have, just make these things as simple as, do not try to complicate things. So why do we do this? It's just to get a clear view and to know where we are heading so that in case price comes back, that will be our next point of interest. Now, when we come back here, one thing that we might be looking at that there is this level, right? That maybe you might not see the market coming back there, but that is a daily time frame. Unless CPI comes with a lot of momentum. Are we together? Okay. And now we're just going to go on the H4. We look for that clear structure that we can only base on. Now, the H4, if you are to look into things, what we want to see and how you can see that things are, when you are to look into things, you realize that the market is relying at this level, right? It has given a touch. But remember, this zone, it is a liquidity zone. So most cases and high chances are that if price comes back there, we will just need to get out. Alright, maybe price will just come. Maybe price can just come, then boom. If it gives a structure on the lower time frame. So we're just going to try to see how the most recent candlestick closed and we see whether we are in or we are out. Remember, why do we take time and laying on DXY? It is because if DXY is buying, the AX dollar pairs are going to be selling. So it works in the same line. So if DXY is buying, that means that USDX pairs are going to be buying, right? Now, let me just first remove that. So now we're just going to dive into a lower time frame just to see how the market it is doing, because however much you can see price hasn't tapped into this area, right? It has not yet tapped. So we need to see, is the market going to tap into this area and pushes away. Now, high chances are that if price taps into that zone, just see, zoom in, and look for a clear. Now, so bad that this candle will also contain the time of CPI, but a good clear example, you would wait for to see the after reaction of the news of the fundamentals, and you see if we manage to tap into and come back below here, that means sellers will be triggered, and then the nearest point will be at this level. That means the other guys, if we have been selling here, the other guys will be buying, and this DGP buy will be selling. But just a little bit, I'm just going to go on lower time frame to see. So as much as you can see that price came back at this level, and what it managed to do, it consolidated. All right, it is consolidated. Now it has just created liquidity below and above. So now high chances are that you would wait for the aftermath. What do I mean by the aftermath? Wait to see this being taken out. If it is time to sell, right, to sell, maybe we clear them up, we tap, we give it up, and we sell. That's how so much confident I would be if I'm going to be considering the DXY altogether. Rather than that, I wouldn't want to exceed below this, because you just realize that the price is showing that it's creating more much momentum, but at the end of the day, you realize that it is in this range. So if we have to continue buying, that means you'll also need a lower time frame zone to be focusing on. Now that is what I would want to see on the DXY. Now, since it is CPI, and in most cases it always gives a double sword, in most cases it gives a sweep, then it comes back again. I would advise wait for the after effect. Wait to see how because the momentum comes for 1 to 5 minutes, and you see if it comes and gives a tap here, it gives a momentum shift, we'll be selling, right? If it buys, that means we'll have to go on the lower time frame, wait for a retracement, maybe on the 5-minute or 15-minute. That means this zone also would have to be mitigated. But remember, we are on the clear zone. We are on the zone where we want to see price tapping. Either it taps and fails, or because remember the market maker, they really know that people are waiting here to sell, right? If you have to sell, that means you have to tap in, get some liquidity to give momentum and push away. The buyers, I can't tell you, just enter here, buys. So that is the DXY. We're just going to go now and look on, I'm going to look on gold, and we also see what it's doing, right? So let me go on DXY on USD, because gold, it's not for the weak, and most people are soft. Their heart is so soft. So I'm just not going to go far. I'm just going to stop on the H4. You realize that the H4 has been trending to the downside, and there is still momentum. When you see certain candle like this, and gives a continuation, that means sellers are really still in the market. So we needed to see price coming and taking over or mitigating this, of which it did not mitigate, right? Now, by look of things, and the nearest zone that you would see here, it is this one, right? So We have that zone also. We also have this build up liquidity that needs to be taken out, right? So if we are to give a hint or a tap in this, we just need to want to see this, just boom. Maybe you're waiting for clear buys at this level. Maybe it can go up, because if you are to see things, you realize that market has been buying for some good time, and there are these leftovers that we're waiting. So seeing this space, just know the market is going to go so much, there are going to be so much volume in the market. That's why I said wait and see the reaction that is in the market, so that you will so be much confident. Getting a buy here, it will really depend on what it is on the lower time frame. All right, you can see that buyers are still trying to see if they can move in. That means if someone can be buying here, that means just considering this one, of which he might be right. Because if you have to consider this price action, that means your targets are just going to be few and your stop loss is going to be there. And maybe you might be considering maybe these highs. Are we together? But rather than that, please stay out of the market, wait to see the reaction, the way it's going to be playing out. So I think if it closes up, that can give a chance for buyers. But why are the buyers? Because you can have your tight stop loss and wait for the aftermath, right? You wait for the reaction to be given on the higher time frame. I think that one, that's when maybe you can be considering it, and you wait, because you know that at least your stop loss will be placed here. But rather than that, the H4 is still a long way off bearish move. So you can see those are two different perspectives. If you're considering the lower time frame, it can only be buys, because you have a very tight stop loss. You won't lose that much, right? And you should be in maybe by the moment if you have to consider that. But rather than that, the H4 is still selling and it's not yet to close. You rather wait to see the aftermath, and this is something that I always advise, to wait to see the momentum, how it reacts, and boom, everything will work on. So let me just welcome my colleague Mustafa. I think he will also give you a hint on other pairs, gold and GPU. He can also give another different perspective. Thank you for joining, guys.
Yes, guys, good afternoon. Hope everyone is okay. Hope everything is fine. And here we are, another day, another fundamental, another fundamental. And for those who don't trade fundamentals, this is not financial advice. Then, two, we are not market makers, that whatever that we say is what happens. But for the time being, everyone has to understand that the market moves in patterns, either continuations or reversals. So to me as a person, today was not my trading day. I never wanted to trade. Yeah, yes, because things were not that clear. And nowadays, one of the best things that you can do for yourself, if things are not clear, is for you to stay away. But as always, let's break it down for you. Yeah, let's try to give a hint based on what I personally trade or how I trade. Today, the pair that I'm giving emphasis more is USDJPY. Now, like you can see where USDJPY is, as you can see this marking, I think it's what price has drawn. We are either breaking above, you talked about it, okay. Let me go to gold. This price managed to talk about USDJPY. You talked about Iran. Okay, let me talk about gold. Now, to the fundamental traders, we are either going bearish on the DXY or going bullish on it. So it's two-sided or it's two-way, yeah, especially in such a time of fundamentals. Why? Just because many would either go long or short. So because many are either going long or short, where exactly are you going as a person? Now, gold managed to break this low and aggressively thereby creating a seller's range, or what I personally consider as a selling structure. Now, if it's a selling structure, to me, someone would think of going in a retracement mode, just like this, a retracement and a continuation. That's not happening. The shapes are not displaying. The shapes are not displaying. They are not displaying. First comment. First comment. Okay, I've gotten it. Now, someone would expect something like that, especially if you trade price action. Price managed to retest, yeah? So it made a clear retest. Now, in making a clear retest, many of the people would go short. Now, fundamentally today, if you check very well, there are chances that we might have a weak dollar today. Why? Just because if you check, there is some, is it hurricane coming up in some parts of what? America. So that can be a signal. And even when you look at yesterday's FOMC minutes, instead of cutting by 50, the guys are sticking to cutting by 25. So whoever trades fundamentals or follows fundamentals more has it showing that there are higher chances that price might go bearish for that dollar index. But that's not final because we don't drive the market. Yeah. So if you check personally, my perspective on the dollar index, if I'm to break it down, we had a very big run up to the upside. Now, this big run up to the upside left a lot to be filled. You can see it there. So to me, I would expect that a retracement might come in anytime soon. Even if it's not brought by these fundamentals, most people get discouraged when what they are anticipating on news doesn't happen as they anticipate. But the fact is, when trading fundamentals, there is what they call the impact, there is what they call the after effect. That after effect means a lot in our trading because it is what gives us the clear direction. Now, in most cases, CPI hits both sides, or both sides are hit by CPI. Now, if both sides are hit by CPI, we are having a consolidation ahead of the high impact news or ahead of a high impact fundamental. What does that give us for those who trade fundamentals more? What does that give us? Like Michael said, we either breaking it up to the upside or we're breaking it down. Now, you as a trader, even if they spike up or down, what signal does it give you based on your trading style is what matters. The signal, what that gives you. If they break up, it's higher chances that we are having continuations. If they break down, we are having signs of a pullback on the dollar index. I don't know if I'm making some sense. I don't know if what I'm sharing is making some little sense. So as someone who is trading today, these fundamentals, keep it in mind or be mindful that whatever comes out, whatever will be put out, is either supporting a retracement or giving us a pullback. So don't be surprised if you see a double edge or if you see a double sword. It is also there, but where the market will face finally is what will make more sense. Okay, so we have a few minutes to the event. Yeah. So we have a few minutes to the event. Everyone is entitled to managing their own money, or everyone is entitled to managing their own risks. But to me today, it's so indecisive. I'm not giving it a clear conclusion. I might trade the after effect. Because NFP did not spike, this one might surprise us by spiking. But to me, the higher chances are looking at selling the dollar. That is to me, that's where my higher chances are. So let's wait for the final judgment and we see, because we have like 2 minutes. Let's see if I can get Forex Factory here. We look at the figures such that the figures can give us something conclusive. Now we're having just a few seconds. Now in the few seconds that we have, the analysts are seeing a weaker dollar. That's what the analysts are saying. Yeah, but all that can be violated because news is news. The impact and effect might do something totally different. Okay, so the analysts are seeing a cut by 0.1 on the core CPI, a cut by 0.1 on the CPI month on month, a cut of 0.2 on the CPI year on year. But at the same time, we have unemployment claims. So be mindful, we have like a few seconds to go. So let's wait and see what the market offers. Now, like you can see, they've made a spike. Okay. They've made a spike. Yeah. And the spike they've made tapped in the zone of the XY. Now, the spike they've made, many people have been stopped out. Or very many people have lost money on this. Yeah, it has been a double-edged sword to the extent even those that hedged have lost it. You know, so what you're seeing here,
was tapped in the other zone, now going down.
what you're seeing here is something which has hit both sellers and buyers. Okay, so scale in and see. We've swept both sides. The market has been indecisive, tapping into the extreme zones. Now, whoever is a good trader expected this spike. That's why today I did not have a conclusive judgment on CPI, because basing on the figures, the dollar is going to weaken. Let us first check the figures. Now, let us see what they've released on the figures side. Now, on the figures side, surprisingly, instead of a cut, yeah, the unemployment has increased. Yeah, that's why you're seeing a double edge, or that's why you're seeing a double-edged sword on that DXY. So today, those who are wise, trust me, today was not a CPI trading day, unless you have a very big account. But for smaller accounts, it wasn't it. It was not giving, or it wasn't giving good results as we speak. So to me, I expect the dollar to do what? I expect the dollar to drop. That's what I expect. That's what I expect. I expect it to drop hard. Then we see how best someone can actually utilize it and trade. Yeah. So be mindful. Today wasn't that a good trading day. It wasn't. CPI wasn't clear. Nothing was clear to be traded. Okay? So those who managed to trade, I believe 90% have lost. That is as far as I'm concerned. 90% have done what? Have lost it. But here comes the real judgment. As I personally expected, I expected a final sell on this thing, and which is currently happening. Okay? So because it is happening like this, someone can reference on and look at re-entries when price creates a solid low. It's not yet done, so be mindful. If price creates a solid low somewhere, then reference to it and wait for price to pull back. Then after you do what? Then after you sell well, because the structure will be clear now. So wait for it to make a solid low or a clear low. Then after, look for some trades in that area. I don't know if we are together, or I don't know if we are at par. So don't rush in that quick. Don't rush in that quick. There is a lot that can happen right now. A lot. So don't be surprised if very many things happen, but today it was clear. The spike was supposed to be there. It was very clear. That's why today you've not heard me give a final judgment that I'm selling this or I'm buying this. So let's just be mindful. Let's keep watching the charts. Then we see if we can get some opportunities in the later time. Okay? So for those who don't know how to interpret these figures, these ones, yeah? Now, there is always what is forecasted by the analysts and economists. Yeah. Then there are values which are they say are what? They are the actual values. Yeah. Now, when you look at this, the actual values are the ones that they release when the event has happened or when the event is going to happen. Yeah. Now, what is forecasted if what is released is different from what was expected? If the actual value is greater than what was forecasted, it's positive. For the what? For the index that is being affected, whether CAD, whether dollar, or for the currency that is being affected. Now, the point here is the unemployment claims also have a very big value compared to what was expected. They have a very, very big value. If you see that actual less than, when unemployment is high, that means that the economy is not stable. So the unemployment claims, the actual was way, way, way bigger than what was forecasted. And if you look at here, it clearly highlighted that for something to be good for the currency, the actual has to be less than the forecasted value. Now, they forecasted 231K, and what was released is 258K. That's a big value. So unemployment is high. Even if you're seeing all these figures supporting the dollar, the unemployment is dragging them back. So that's why events which are released at the same time, they usually have those spikes. So the unemployment is dragging back even what you would think is good for the index. That's why you're seeing that even the chart, it's up and down, it's not static. Yeah? We did not get the closure below this. We don't have a closure below that. So be mindful on that. We did not get a closure, so a lot might be expected. So if you want to trade, even those who say, me, I trade the after effect or what, this time round, don't trade it. You first let it cool, let the market give you something clear, let the market give you something conclusive, and then you trade that. Because here, still nothing is conclusive, or nothing is conclusive based on the what? The chart or the technicals. The unemployment has been mob, and in being mob, it's dragging even what would be positive for that dollar to become negative. I don't know if I'm making some sense. Or I don't know if I've shared some sense. So let us wait for something clear. You never know, it might come up, and people trade that. But don't risk your money, because you know when you're going to trade CPI and then it hits the other direction, you hurry to do what? To take action. Not really. Never hurry to take action, especially if nothing is showing their side. So today, many have been washed. I promise you that. And because many have been washed, be patient and see what the market does in a clear way. You will see, I will reference to that, but there is no closure below. So if it's what if it's a liquidity sweep, and I end up also getting swept. So just be mindful. Don't rush in to take action, or else you will donate to the broker. Okay? So guys, I don't know if we are good, but personally, I'm very okay and very good. Very okay and very good. Today, my money wasn't supposed to suffer, because what I'm seeing is a lot of money has suffered today. So hopefully you're not among those that have suffered. Okay? So let's keep on our watch. Let's watch. The market is indecisive. But anyway, let me give you my overview of everything. Now, because price has failed to close what I would personally take as a continuation trade, we are having a push to the upside. But the push to the upside is also not yet conclusive. So because we are in a higher time frame zone, or because we are having a higher time frame structure, the structure that you're seeing, let me reduce this one, that one there, that's the structure, that one there. So if this is the structure, if you take time, check out the M15 chart today evening or tomorrow. When you check out the M15 chart, you will have to see that the M15 chart will create a change in market structure, or it will create a shift in market structure. If it does create that shift in market structure, take the sales. I don't know how people trade their shifts in structure, but it can be two-sided or it can be two-way. So don't be there and you say, Mustafa gave us a bad shift in structure. That's not what I know. That's not what my mentor gave me. But the market can shift by creating a high that fails to be broken. Then a low gets broken. Or else it can as well be this, just creation of a double top. Then the market breaks below, then it continues to sell. So be on a watch. Whatever comes is what you will trade. So as already speaking to you is Mustafa, and don't miss, we have a class today with personally one of the people that I know are very experienced in the game, and I'm happy that they are close to me. That is WCK. So don't miss. Don't just be seated there and you're like, I will not study because the news release did not do me well. As I said, it's all entitled to your own decision making. No one else's. So the decision was made. If price bought, yes, make the money. If price did not buy, still don't feel bad because you did not make money. Yeah. So guys, that is it. That is all I can share. We meet in class today. For those that will study, for those that will be mourning because of CPI, next time better. Okay? So guys, I'm out. Praise, do you have any supplement? Nothing. Yeah, Praise has said, you follow whatever that he has given you. I know he has given you a very good structure to trade. If you came late, you can go back as well and reference to what is happening or what price is doing, then also trade. Okay? So all in all, don't feel bad. That's what me I'm emphasizing, because I believe 80% of the people that actually traded this have lost it. I believe. That is my personal synthesis. So being among the 80% ain't bad, because we all lose, make. Okay? So guys, that is it. But kindly watch out for that structure. You will thank me later if everything happens the way we've plotted it. Thank you. Have a nice one.